Gold has just smashed through $3,500 per ounce in September 2025. But the bigger story isn't the price, it's why this rally might only be getting started. The real driver, central banks. For 3 straight years, they have been buying over 1,000 tons annually, about 20% of all newly mined gold. This isn't a short term speculation, it's just a structural shift. Since Russia invasion of Ukraine, emerging market have been accelerated de-dollarization using gold as insurance against sanctions and currency risk. Meanwhile, the Federal Reserve is preparing to cut rates. The make this that makes gold zero yield less of a penalty, while inflation and fiscal concerns in the U.S. boosts its safe haven appeal. Add add to the dollar sitting at a 3-year low, you have got perfect setup for bullion. Western investors are also back in the game. ETF holdings are at their highest since 2023, signaling renewed institutional demand, while Asia consistent appetite, especially from India and China, keeps a solid price flow under gold. Of course, no rally comes without risk. Profit taking could spark pullbacks, peace deals could reduce geopolitical premiums, and if central banks suddenly slowed or reversed purchases, we could see volatility spike. But the structural demand story, driven by monetary uncertainty, de-dollarization, and shifting global power dynamics, suggests gold momentum isn't just a flash in the pan. In fact, the $3,500 mark may be just a beginning of the much bigger revolution. So the real question for investor is simple: is gold new floor higher than we have ever imagined?